Hello, I'm Finola Burke from RaaS Research Group, and today we're catching up with Dimitri Courtelis, the Group Chief Financial Officer for Ricegrowers Limited, trading as SunRice Group, ASX ticker SGLLV. Dimitri is joining us to talk about the company's recent half-one results. Thanks, Dimitri, for joining us.
Thanks for having me, Finola. Always good to be here.
So the SunRice has reported a solid H1 for FY26, delivering a 14% increase in impact to 36.6 million, aided by a lower tax rate, but that also on the back of a 3% decline in revenue. What have been the key drivers in delivering that better bottom line performance?
Yes, well, it's certainly been a mix of where we're trying to grow the business versus the other positions that aren't performing as well. So, for example, on the positive side, our Toscano position, our SaverLife position, the markets in the Middle East and the US have all performed strongly, and we're very pleased about that because that's essentially underpinning the 2030 strategy. But offsetting that has been the Pacific markets, which has been a bit more subdued in the first half of this year. But having said that, the mix or the profitability in the Pacific markets is far less than the rest of the markets that I've mentioned. So over time, it's really around transitioning the size of the business and where we actually deliver our profitability in obviously the more accretive type of segments as we look to embark against the 2030 strategy. But at the moment, all being equal, whilst slightly more subdued on the top line, we have focused on the performance of the mix and ultimately delivering a higher profit at bottom line and playing into EPS, which has been accretive, which is obviously a key focus for investors.
And Dimitri, branded products has been a key initiative for the past couple of years, and there's been significant investment in branded products in this result. Did you see any new branded products contributing to this half, and do you have any more coming up through the course of the rest of the financial year?
Yeah, there have been a few products in the pipeline that have hit the market. So in the first half, in the Toscano range, we've got burger buns, brioche buns, and flatbreads that have been very, very popular. We've also seen some of the one-pan risotto that's hit the market in ANZ. But also internationally, we did launch a basmati product in our Sun White brand in the UAE market in particular, which has been performing quite well to date. And then to the second part of your question, if we turn our minds to the second part of the year, we are looking to launch the SaverLife cat range to complement the SaverLife dog range that has been performing very, very well. And over in the US, our Hinodi brand, we're looking to launch some more rice products in that brand as well. So overall, the pipeline for innovation has been full, and we are quite looking forward to the products hitting the shelves in the second half as well.
And rice prices in some grades are now at 40-year lows. What are some of the positives and negatives of this for your business?
Yeah, good question. So I suppose that from a high-level perspective, on the positive side, it does put the ability of our global sourcing team to procure rice at very sharp rates from all of the positions that we're able to contract rice from. But having said that, you're then selling into markets that you have to be mindful of the retail sales price that you're obviously selling those products at to maintain a healthy margin. But then on the negative side, it's certainly in Australia puts pressure on the paddy price for the Australian growers as those international rice prices come off. The ability of selling Aussie rice into those markets comes under a bit more pressure, and particularly as the FX is off those historical lows, as the AUD still subdued but gaining a little bit more ground against the USD. We're not benefiting from that exporting in AUD as much as we were in the last year or so.
And the rice crop for next year is expected to be lower than recent times. Is this the result of lower lower rice prices leading to lower plantings, adverse conditions, or better returns available for growers elsewhere? And how many years of lower planting could you absorb from existing stock before supply becomes an issue?
So the drier conditions are really playing into the increase in water prices for next year, which has a direct effect on the size of the crop that's being grown. So all the other factors are more indirect in nature, but the absolute prime reason for the lower rice crop is the price of temporary water. So you'll get crops that are fixed plantation in nature, that have access to high security water, particularly when you consider the likes of citrus or nuts and almonds and the like. But from an annual cropping perspective, when you think about rice or cotton, it is heavily exposed to the temporary water market. So that's what's put a lot of pressure on the upcoming growing season, and we will ultimately be harvesting a much lower crop next year, April, in the usual time frame of harvest. So on the one hand, we will enter next year with carryover inventory from this year that we've preserved for the milling operation, and then also flex up our international supply chain. So in terms of meeting our global demand, we're comfortable that we'll be able to source rice across the globe within our global strategic footprint to meet those market demands. It'll just be a case of where you're sourcing from, and then, of course, the price dynamics and variable costs and fixed costs and how that all comes out in the wash. So FY27, we're probably a good 3 to 6 months away from being able to comment on the outlook for that period. And then to your question in terms of how long, look, generally that we're thinking this is a 1-year blip from a drier conditions. If that does last longer, it will just mean we'll have to accelerate our global sourcing strategy and build that out with pace. But this isn't the first time we've gone through this environment, and we're a very different business to what we were before. And having said that, we've got these established global supply chains as well.
And Dimitri, how are you managing some of the global challenges with rice at the moment? I mean, we've seen significant increases in Thai rice due to the cost, due to supply issues. US tariffs have hit Indian rice. Are you seeing any impact from these issues on SunRice?
So fortunately, we're not directly exposed to the tariff challenges, and our business in the US imports a very small amount of rice globally. So the majority of our US rice is locally grown, sourced, and processed, and sold locally and internationally. And the tariff noise has also created some indirect opportunity, as these other countries that are facing excessive tariffs with the US have to sell their products somewhere else. So it has tipped a bit of a rebalancing of trade amongst other nations that source and procure rice from each other. From a SunRice perspective, it's not so much the direct tariff issues, it's more the indirect impacts. Currency is the biggest one, as the AUD continues to be under pressure. Whilst it's slightly performing better than it has been in the last 12 months, it's still well off its median position that you'd expect when you talk to the banks, and that just makes it more expensive when you're importing products, and ultimately puts pressure on the consumers locally for those products. So that's essentially the biggest area that we're seeing that noise come through.
And your balance sheet's in the best shape it's ever been in. I mean, you've only got debt relating to working capital needs. With the balance sheet in such good shape, are you feeling any pressure to take advantage of your strong position and acquire businesses? And would you consider taking on debt to make a significant acquisition?
Yes, so no new pressure compared to what we've been facing in the past. And on the one hand, being accused of having a lazy balance sheet, I think is all relative. So leverage levels now down to 1.1, core debt is 0. And as you said, all of our debt is seasonal in nature and back to back with inventory that we'd look to sell in the near term. So over time, and when you look at the dry conditions, that inventory level will probably reduce as well, which will probably reduce the seasonal debt even further. But in terms of facilities, we have 120 million of core debt available to go after opportunities as they arise. And obviously, with where the share price is at the moment, more palatable than where it has been in the 12 months. So we're also potentially able to tap the market again if those opportunities arise. So we've got those options, which is good to see. But ultimately, M&A will continue to be a core component of our strategy as we look to grow the business with both organic and inorganic growth to deliver against the 2030 plan. So at the end of the day, and the debt level being one thing that's well under control, we would continue to look at M&A opportunities more so internationally as we look to fill out our international strategy. But no increased pressure compared to what we've been dealing with over the last few years, and we have been acquisitive, so we'd look to continue in that path.
And Dimitri, finally, and then SunRice recently joined the ASX 300 index. So congratulations again on this. Have you seen a big pickup in investor interest in the company as a result?
It has been quite a journey, Finola. If I turn my mind back to earlier this calendar year, in February, we got our first substantial institutional investor onto the register, and fast forward to today, we have over 50 instos on the register. So the register mix is certainly far more balanced between instos and retail, which is what you want, and ultimately helped getting into the 300 and not getting over our skis, but obviously the ASX 200 and 100 down the track as we go after those aspirational positions. But it has been quite a journey, but pleasing to see that investor relations strategy has been paying off after these years on the ASX.
Well, thank you, Dimitri, for taking the time to speak with me today, and looking forward to catching up with you over the course of the next 12 months to check on SunRice's progress.
Thank you, Finola.